to hone in particularly on the agricultural lending. And I suppose the first question is around part of the criteria of not being eligible is that people in farmers in financial difficulty would be excluded. So I suppose that seems a bit peculiar to me, because I'd imagine that where lending situation should be where somebody maybe is in financial difficulty. So how do you assess whether somebody is in financial difficulty or not?
That's assessed by the lenders that we're working with. That's one of their frontline functions. So both in provision of liquidity and in provision of risk sharing, which we did with the credit guarantee scheme, we work with the banks on the basis that they always have some skin in the game. So they were fully exposed on the first piece, and then in the agri cash flow support loan scheme, they still had 20% of the risk. So they underwrote those loans, and we outsourced that function to them. So it was up to them to assess that a business was not in financial difficulty. The reason, there's a couple of reasons. Obviously, it's lending into a situation where a business is in financial difficulty is pretty much guaranteed that you're not going to get that money back, and it's actually, in effect, that situation is more suited to a grant or some other form of financial support that's not contingent in that way. But also, we're very strictly bound by the state aid rules, and one of the core tenets of state aid rules is that state aid should not be extended to businesses that are in financial difficulty. What we do focus on, though, is businesses that are vulnerable but viable. And so we should see the cohort of loans in a guarantee scheme take place at a higher risk level than the banks would ordinarily be happy to take. And that's one of the things we've facilitated with the Brexit loan scheme. It's one of the things that we facilitated with the agri scheme. So in the agri scheme, we did not let the banks take security for those loans. It meant the farmers could access them very quickly. It didn't encumber their farms. And it was, as a result, given the price, that was very popular.
So really, farmers that were in financial difficulty weren't able to access this funding. So it was almost a case of, if you don't need it, you can access the funding. I know in terms of growth and development and all of that, it can play a role there. But I think the perception was that this funding would be able to access for those who are in financial difficulty, often through no fault of their own.
What we were targeting in that instance, because we were using European Commission exceptional aid as well as government support, was a situation in the market that was identified at a European level where the whole gamut of livestock farming, and the government extended it into non-livestock as well, was suffering that year due to a number of different geopolitical events, whether it was the Russian crisis or the milk price crashing. And that created a working capital issue amongst farmers who were heavily reliant on merchant credit and overdrafts, which were very expensive, and it was eating into farm income, it was eating into their net sustainable farm income for the year. I think there's also a category of farmers that are in a very difficult situation where they may have over-leveraged in the past and are looking to restructure, and that's a very difficult situation to extend credit into, with guarantees or otherwise.
Is it available to fishermen?
No. There are three sets of state aid rules. One is for the general state aid rules, which cover SMEs broadly and larger businesses as well. There's the agriculture state aid rules, and then there's the fisheries and aquaculture state aid rules. And they all have, each one has a de minimis scheme, and each one has a block exemption regime. But we've not been able to find a way under those state aid rules to support fisheries businesses at this point in time. But it's something that we are keeping under consideration, and if there is a requirement coming through the Department of Agriculture, Food and the Marine to focus more on that, then we're very much ready to respond to that.
Yeah, I think it would be important that that's considered, because there are many opportunities out there as well as, I suppose, challenges in terms of fishing. I'm just trying to get a handle on the numbers. So the numbers for the BMW area, the numbers, say, in terms of the agricultural support loan scheme were how many? I take it would be one loan per...
So, there's a slide here which says risk-sharing activity in 2017 continued. It shows working capital of 144.9 million. And there you can see the percentages allocated by different geographies. So,
I just The numbers, in terms of the numbers, say, of farm loans that there were for the BMW area. I suppose what I'm trying to get at is, often farmers would say, like the smaller farmers and the farmers who need help and support in being developed, that, you know, it's a bit like the entitlements, that the loans or the financing goes to the bigger farmers rather than the smaller farmers. And obviously there'll be a greater number of smaller farmers in the BMW area. So I'm trying to get at how many, rather than...
We don't have, I apologise, we don't have the numbers of loans, but in terms of the proportions, you know, I think the Borders and the Connaught area, between them were over 30% of the loan volume. Now the average loan is, I think for the scheme, about 34,000 euros. So, and that average is consistent across the country. So I think there is a clear indication there's a strong share of the lending did go to that area. But I will come back to you specifically with numbers of loans in the BMW area.
If you could, that would be great. And just a further breakdown there in terms of the numbers and in terms of maybe even the averages just for the BMW areas. We see, I suppose the main thing we're trying to get at is, was there a fair sharing of these loans? And, you know, if we're looking at average incomes, we know that the income, the further west you go, reduces, and you have incomes of as little as €3,000. And I'm just wondering, would that be where you have the low-income farmers? Would that be an impediment to them accessing this type of finance?
And it was, unfortunately, these loans went out incredibly quickly, and it was a tight time frame. Now, we did, from the budget onwards in 2016, leading up to the launch at the end of January 17, we promoted this as widely as we could amongst farmers, and the IFA did a great job in making sure that all the farmers were aware. But what that meant was we had a very rapid process of applications that came in after the end of January of last year, and it filled up the loan scheme really very rapidly. So if you weren't in that first batch, then it was a limited ability to access this.
Yeah, and I suppose not all farmers are members of the IFA, and you have organisations like the INHFA and all of that as well, who would really maybe represent some of the smaller farmers and the hill sheep farmers.
I mean, I think the one thing we find about farmers is they are the most switched on borrowers in the state. They are incredibly aware. I mean, when we first launched the lending program back in 2015, we really didn't have time to outreach to farmers, and within months they were already drawing down almost a quarter of the funding. So they
have a further look in terms of the figures of it. I just want to ask you, the Minister for Agriculture indicated in January that another similar scheme to the 150 million agricultural cash flow scheme would be up and running in the second half of the year. So has there much progress been made in that between yourselves and the department?
We're in active dialogue with the department on that, and funding has been allocated in the budget for 2018. So we're working to bring that to market as soon as we can, but there is a need for a time period between the launch of schemes, because we are restricted in only having 3 significant banks that lend to SMEs, and their ability to bring schemes to market is serial, unfortunately, rather than parallel. So we have to allow a scheme to bed in and then run through the process for launching the next scheme. So there's at least a 6 to 8 month gap required between launches to deliver that. But we are in active dialogue, and in fact, we're actually due to meet the Minister for Agriculture tomorrow to discuss that process.
Did you consider putting the schemes through like the credit unions?
We have had significant dialogue with the credit unions, not in the last 6 months. And one of the things that was very clear is the credit unions do not lack liquidity, because they have huge deposit bases. A deposit base of about 14 billion euros. So for us to lend to them would actually cost them more to borrow from us than it does to take the deposits from their customers. So there was no solution to be offered in that context. As it comes to risk sharing, we would love to be able to work with the credit unions in time. But what we see with the credit unions is, even with the reduced number of credit unions, they're very fragmented and they have their own geography in each case. And what that means is their operations are very lean. and they rely on volunteers. So they don't have individually necessarily the resources to staff up to do SME lending, which is a fairly intensive process. Even the larger ones who represent the teachers or the guards aren't naturally inclined to do SME lending because teachers and guards aren't SMEs, whereas it's more the regional credit unions that would do that. What we are seeing, and we've been encouraging, is credit unions start to club together to share the resources and pool their resources to create lending platforms, which will then help screen on behalf of a number of credit unions, SME or agri or mortgage loans, which they can then take onto their balance sheet and they can take their own decisions on based on the recommendation of that platform. So we know they've been actively doing that with mortgages. Recently, a group in Galway launched a scheme across 6 credit unions for farming loans, which they're offering at 6.75%, which is, competitive with the banks. And we hope in time that we'll see the emergence of SME platforms in that context as well. As those platforms become established and as they establish a track record and an ability to underwrite credit loans effectively, we would love to be able to work with them in terms of risk sharing or the credit guarantee scheme or other schemes. But they need to achieve a level of substance first. And it's very exciting to see the exercise in Galway, and we're following that with interest.
Okay. So 6.75% is
still high.
Is very high. I suppose that's why we need a public banking system similar to the one that we're looking at in Germany, the Sparkassen one. But we'll talk about that another day. The 25 million in the last one, in the January 2017, actually leveraged 150 million. Would you see the same thing happening again in terms of the 25 million? What have you estimated?
We don't have a firm estimate on that because we're looking at a potential to team up different schemes together under one platform, working with the European Investment Banking Group. But it would certainly be, I think, leverage a scheme at least of that quantity. It just depends on the structure of the guarantee and the nature of the sort of interest rate parameters that are set around the scheme. So unfortunately, I can't give you a hard answer on that because we're still working on that analysis.
Just looking at the reasons that people were refused, have you a breakdown of why people were refused and the numbers again that were refused?
We've not, to date, because we've not been responsible for the actual underwriting of the loans. That's always sat with the frontline lending partners. We're not able to gather refusal rates, and in fact they're not very good at gathering their own refusal rates, but they do report them, and they report a very, very low refusal rate. We do have a separate evidence from the credit demand survey, which the Department of Finance runs every 6 months. That was published recently, and it showed I think it showed a rise in refusal rates recently, but we're not in a position at the moment to give figures on the refusal rate for SPCI supported loans. However, under the new scheme that we're launching tomorrow, the Brexit scheme, we will have a clearer indication because the SMEs will be applying to us before they then apply to the finance providers involved. So we hope to enhance that level of information going forwards. One of the struggles is that actually to understand what's a refusal depends. If someone walks into a bank and has a conversation with a bank manager and gets a verbal indication, and there's no paper record of that, there's no transactional record of that, so
yeah,
it's hard to really analyse.
Yeah, I very much welcome that because I think we do need. I think that information is very important. Even if somebody goes in and has the initial conversation, and then they can be dissuaded from applying, and it's never recorded. I think it's something that needs to be monitored. Just what?
The powerful thing with this scheme tomorrow is that it means that a customer will walk into a bank pre-armed with a guarantee, and that creates a different conversation.
I'm just going to ask this finally, sorry, Senator. The uncertainty surrounding CAP, has that had any influence on your planning for the next scheme?
No. I think we're working with the Department of Agriculture based on the market failures that they're identifying in the agri-lending space, and that I think is obviously anything that impacts farmers impacts and cap is obviously a huge impact on farmers, but it's not something at the moment we're directly tying into the underpinning of the next scheme. But I imagine it is a factor, certainly in the thinking of the department as they articulate the market failure. At the end of the day, we're a policy delivery mechanism, and the departments are the policy setting organisations. So we really follow their lead in that respect.